Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Hindustan Construction Company or HCC and why I feel now it could be a risky buy at the moment. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about HCC. Well, the company was established in 1926 and they provide infrastructure solutions all over India. It was a gem in the 2003 to 8 bull run. If you remember, that bull run took place in the wake of high debt and leverage companies going up like Larsen and Toubro, BHEL, etc. Even some oil ancillary companies like rig companies, Aban Offshore, etc. went up sharply. Similar happened with HCC, so it gained a lot during that 5 year period. It helps in hydel power, transportation, nuclear power, and water solutions. So, virtually, they are into all the segments of infrastructure that you can think of here in India. And the biggest bane or the problem that the company had was of Lavasa. So, it is part of a conglomerate which has helped Lavasa grow, or which was trying to help Lavasa grow into a smart city well before the smart city project came into being. The financials for June FY20 compared to June FY19, and we see a remarkable change from what had happened, say, about 2-3 quarters ago. So, 3 quarters ago, I put up a video on HCC. You can have a look at it. The link is right here in the video. So, in that we have seen that the profits dropped and the company went into heavy losses. But here what has happened in the first quarter of FY20 is that the sales have grown by around 7%, and they have come out of losses and they have produced a profit of 6.4 crores, although the EPS is still negative because of the book value getting smashed at the moment, and in the wake of that the EPS still is negative, but there has been a remarkable improvement in that as well. Return on equity remains positive and net profit margin comes out to be 0.28%, whereas about 3 quarters back when I put up the video there was no net profit margin because there was no profits. So the performance of the stock has been pretty dismal. It has been down 75 to 80% in the last 2 years. The market cap has been reduced to 1400 crores, and the stock has been falling relentlessly with heavy debt burden on the company, and it is at an all-time low at the moment. So around 10 rupees, 9 rupees, or even less than that, it touched around 7.5 rupees. That is an all-time low for the company, and I feel that maybe it has touched its 52-week low already. What were the reasons for decline? So, if we look at the facts, first of all, the stock doubled in 6 months during the 2016-17 period when many of the infrastructure stocks went up. Not real estate, but infrastructure stocks and bad quality stocks which had high debt and leverage went up very quickly. The promoter holding is low and it became even lesser by the time the first quarter FY20 earnings have come up, and the results have continuously been bad. So a company that was producing 100-200 crores profit in 2008-9 went into heavy debt and heavy losses by the end of FY18, and now it is coming back from the brink because the first quarter of profitability has come up, and there are other news events happening around the company which I'll discuss in the next slide. The future looked uncertain with debt ballooning for the company, and that's why the stock declined sharply, and people were looking at companies which were having good profitability, even if they were large cap companies. If they had very good profitability and good ratios, return ratios, they were going for that, and that is what is happening with the Nifty index. The small cap mayhem also hurt the stock, because all of the small cap companies got smashed during the last 18-20 months. So from Jan 2018 till now, the small cap index has been beaten to pulp, and nearly all the small caps and mid cap companies uh, which are in debt or which are in trouble uh, are being sold by the retail as well as institutional investors. So what has changed that I had to put up this video? So what has happened is, just about few days back, 2-3 days back, there has been a news that Haldigram Group and along with some other buyers uh, jointly are ready to bid for the Lavasa project, or for the Lavasa land that HCC had acquired to build. And the main problem or the main issue that the company has with respect to debt and leverage is from Lavasa. So if somebody or a conglomerate or a company comes up and wants to buy that, that would really help the company deleverage its books and get out of a lot of debt. And so this has been a very big positive, because this was the whole overhang on the company for the last 7-8 years for HCC. Deal could really resurrect the company for sure, because I feel then some cash would come in and a lot of debt would go out, and then the company would be able to fund their other projects and get into mainstream infrastructure business, which is currently on, and probably have their balance sheet repaired to a greater extent. uh, and you need to take into consideration the stock price. It is not trading at very high valuations, and if something like this or a news of this sort comes in, then it's going to spur the stock price for sure. I'm not saying that you buy it for a lifetime or you buy it for 5-7 years, but this could be a tradable buy at this moment with a strict stop loss and a risky buy to make around 80 to 100% or even more in a quick span of time if this Lavasa thing gets resolved. Also, you need to take into macro things, or take into consideration some of the aspects on the macro level. For instance, the government would have to look at infrastructure and capital goods sector with a greater extent, and they may look into spending more. Government spending would come in more in the infrastructure, and so more projects could come in for HCC. And the valuations, as I have said, is quite reasonable at around 10 rupees, 9.5 rupees, where about 2-3 years back it was trading at around 25-30 rupees. So my suggestion is, it is a very risky buy. Somebody who wants to take risk can take this, and if the deal doesn't go through or something happens to the deal, then do not stick with the company. Keep track of the Lavasa bidding project and everything that goes around this Lavasa project. If that doesn't happen, you have to exit immediately. So keep a strict stop loss of around 20-25% from the buy price, and just trade and hope for the best, because I never suggest such companies, but I'm suggesting this because of the price at which HCC is trading at. So this was my video on HCC. Kindly like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.